We have a saying in the mortgage business, right? Diapers, diplomas, death, divorce, right? There's always a reason someone's going to be making another loan transaction. Maybe it's equity, who knows, right? So I think if you can capture that information, if you knew that my kid was going to college in the fall, would you be saying, hey, do you want to tap out on some of that home equity and, not have to stroke a check for that first year? I might be interested in answering that call, right? So I think it's capturing the information, accessing the information, then taking action on it in a way that's going to differentiate yourself from everybody else out there.
Welcome to Pioneers, the show where we explore the intersection between humanity and AI. I'm your host, Ankur Patel. Over the last 10 years, I've built 3 AI startups, written 2 books about the subject, and I run a weekly AI newsletter. I also regularly teach and speak about the topic at conferences. This technology has grown faster than I think any of us could have imagined, and it's making us ask really important questions, such as how ethical is AI? What will this technology look like in a few years, let alone a few months? And most importantly, does it have the power to truly change the world? And what does it mean for you? On this show, I'll be interviewing the founders, operators, and pioneers that are introducing AI into their companies and industries. We'll be asking them the really heavy-hitting questions that make them dig deep into the core of what we do. And without further ado, let's dive into today's episode. Welcome back to the show. I'm your host, Ankur Patel, and today my guest is Jen Peachman, who's the VP of Director of Strategic Lending at GPC Mortgage. Jen, welcome to the show.
Hi, thanks so much for having me.
So Jen, maybe to start off with, the mortgage industry is very cyclical. There are boom periods and bust periods around activity that lenders like yourself have to go through. Could you maybe zoom out for us, for the audience, around where in that cycle we are relative to, say, 5 years ago?
Well, I'll tell you, 5 years ago, every mortgage lender in America was trying to keep up with the demand, right? We were in the lowest rate environment that I think we've ever seen or will ever see. And, folks were in that COVID period. We saw rates at 2.5%, under 3%. And we were just trying to catch up with the demand, right? We were doing a lot of business unexpectedly, I think, in the midst of a global pandemic. Now, fast forward almost 5 years later, we are in probably the most longest or prolonged period of volatility that we've seen in a very, very long time in the mortgage industry. I mean, I've been doing this not as long as everybody, but, over 20 years. And when I jumped in, I was in that lull of 2008 where, it was a global crisis economically. Not the case recently in these past 5 years, but certainly we've been impacted by a completely volatile market. We're seeing a lot of inventory issues nationwide. We're seeing a lot of affordability issues nationwide. We've seen mortgage rates skyrocket. We've seen house prices go crazy. We've seen a lot of natural disaster. As an industry, we do have a lot of compliance costs that have certainly been impacting profitability for a number of years, probably since the 2015, 16, 17s. But now in 2025, I think for us as a country, we're seeing first-time homebuyer ages the highest they've been that I can remember. The average first-time homebuyer in America is now 38 years old. That's incredibly high, in my opinion, for what it's been in the past. We're seeing those inventory issues all over the place. We've got a lot of people sitting on, I know I'm sitting on a 2.5% mortgage. I don't want to touch my first, right? There's some things I might want to do with all that equity that I've accumulated over the years. I think we've seen post-election in the recent months, a ton of changes coming, likely more to come as well. So I think a lot of us are kind of in this period as mortgage lenders ready to do business. But we're seeing historically in the past year and a half, a lot of folks sitting on the fences kind of waiting to see, are mortgage rates going to go down, right? What's going to happen with the election, right? On the back end, internally, we're seeing tons of margin compression. We're seeing a lot of acquisitions from smaller, even banks nowadays. We're seeing banks being acquired. We're seeing smaller independent mortgage companies being acquired because they just can't afford or keep up with the business and make money doing it. I've seen a lot of credit unions just getting out of the mortgage space, right? It's certainly tough right now. From my perspective, I've been reading a lot of reports from the Mortgage Bankers Association on next time home buyers and affordability and just what we can expect. I don't think anyone knows what to expect this year, quite frankly, for the mortgage industry and the economy as a whole. So that puts, additional wrench in things. But I think, the mortgage lenders that, have weathered this crazy storm and are still around and are still trying to innovate and do new things, they're really needing to be focused on efficiency for their sales team. How are they equipping their teams to do the best work they can? As a mortgage loan originator, you're probably doing 5 times the work for the same amount of business that you were 5 years ago. And that is the reality for our sales teams, right? I think there's a education issue for up and coming home buyers and the next generation of home buyers in our country. And I think the lenders that are playing the long game on the sales front are going to win that business long term. And I think the mortgage companies who are evaluating their tech stacks, doubling down on some of those really good partnerships, exploring how their team can do more with less or do more output within the same amount of days is certainly going to be pivotal for us. So it's been a wild ride in the mortgage industry. I'll tell you that in the past 5 years.
Yeah, I mean, anecdotally, we've heard and have seen, loan officers and underwriters 5 years ago just be in such hot demand, where there was unfulfilled demand around both new purchases and then refinancing that loan officers and underwriters couldn't serve. So there was like an unmet demand just because of the supply of people that could serve them. And then over the years, I think obviously the demand has cooled given the volatility in the larger mortgage space. And I think banks and credit unions and others are doing less with more, or trying to do less with more to, again, kind of address that margin compression that you mentioned. And it's very interesting to hear that potentially automation and AI and like just modern tooling may help with that journey, which is, can we do more with fewer people in some ways? So you don't have to necessarily hire when demand picks up, because that helps protect margins, which are really important for the business to be sustainable, to be profitable, to continue. And I'm curious, in your perspective, where are those great automation opportunities that still remain? And maybe we could even take a step back before that question, which is, what automation have you seen to date in this space, in the mortgage origination space, that the industry more broadly has adopted?
I think it's certainly come a long way in the past, I'd say 3 or 4 years. I've seen a big evolution in the technology offered from vendor partners out there. I think a lot of folks have started dabbling into automated underwriting, reviewing of financial documentation, that sort of stuff. I think, to your point, right, we have a lot of mortgage professionals who are sitting in the back end reviewing information on documentation that doesn't necessarily need human eyes, right? I think there is the opportunity to do a lot of that intelligent document processing to fill in a lot of the financial details through the underwriting process. I think, the problem has been, I think, the amount of time since maybe some of those early adopters jumped in. It's taking a long time for them to see that ROI, especially in the more complicated and complex loan scenarios, right? I think, conventional loans, let's start there first, right? And then let's get into the deeper, more complex products and programs. On the front end, I actually worked for a company that for a little while that did some pretty great stuff in natural language processing and robots. I think at the time, right, it was super expensive. I'm thinking that as we were seeing the technology costs go down, I'm seeing more people look into solutions like that. I tell you what, I miss my little virtual assistant robot that I had at that company. It was phenomenal. Scheduling meetings, asking questions, accessing information and documents that we have internally. Like, time is money, especially on the front end, on the sales side and the origination space. And that's where I spend a lot of my time. I think as companies are looking at evaluating new product strategies, right, to kind of expand their reach with home buyers, whether it's home equity loans or construction and non-QM lending, that sort of stuff. As you're introducing these new products and programs to your team, it's the accessibility of information and the time it takes for an average loan officer to make sure that they're reaching all those guidelines that that specific product requires, right? If you can find it right away, as opposed to searching and scrolling online, 20 minutes, how many times a day adds up, right? I think evaluating your workflow and where are you having people check, where are you having humans check versus robots, right? I think I grew up in operations, and it was when we had paper. I'm that old, right? And it was checking the checker that checked the information before the next checker that checked the information 3 times before. So how much time are you spending on the back end of the process? I mean, right now we can all close loans in under 30 days, right? Maybe some of the banks are a little bit backed up on some of their kind of portfolio products, but mortgage lenders are ready to do business, right? But for us as an independent mortgage banker, it's all about capacity on my warehouse line and how quickly I can front end to back end get that loan off my books, whether I'm servicing it or not, right? So every day costs money. So you really have to spend the time to really evaluate your processes. And I think 5 years ago, even 4 years ago, when we were still doing tons and tons of business, people weren't spending their time looking at the processes. They were just trying to put Band-Aids on it to continue to ingest all of these loans that we were overwhelmed with. Over these past few years, when the pipelines haven't been as heavy, if you haven't been looking at it, you've certainly missed the boat, because I'm starting to see things warm up a bit. But I think you do certainly have to look at it, because time is money. Every day it sits on my line is more money. And I really want to focus, or most companies want to focus their staff on what really requires their brain power, as opposed to the vanilla loan, right? So if it's if it fits in all the boxes, right, why am I checking that information again? I would rather allocate my super expensive underwriter to focus on the more complex products that I probably don't think that the automation or the vendor can support at this point. So it's everywhere, even from looking at trailing documentation and pulling and extracting information there. We are such a paper heavy industry that has so much information and data available to us. Not only is it how you're evaluating your processes, but how are you using all the information and data that you have at your fingertips to identify recommendations and scenarios and have a higher touch automation CRM, right? There's a million things I think that folks can focus on. I think it's where is it going to make the most impact first, that you feel the most comfortable in exploring with. And then once you get that, you move on to the next thing. So us mortgage bankers have shiny object syndrome, where we ooh, we want it all. We want it to happen tomorrow. That's just not, I think, reality. And if you're going to invest in AI and automation, know it's going to take some time, and it's going to be a learning process, and you got to teach the system, and you've got to really understand the impact of the automation to your team, whether it's not money initially, time can be money too.
Yep.
So I think thinking about how you're evaluating your ROI calculation along the way is super important as well.
Yeah, I think that resonates a lot with how we view the world. I mean, I think there's disproportionate advantages to being the first lender with a competitive quote out to the borrower. Your chances of winning are dramatically higher. And then once you have that attention of the borrower, being able to close that out as quickly as possible so the same individuals can work on the next set of opportunities, that becomes really important. And you're absolutely right. During the very hot, busy years, the periods there, that's not really the time to go and look at the process, introduce new technology, and kind of make yourself stronger as an organization. You just can't. You're just basically treading water, trying to stay afloat. You're trying to brute force your way to getting kind of the volume handled. it's during these lean periods where there is, margin compression. You're trying to figure out what can you do to improve margins, retain margins, and then prepare yourself for, basically a little bit more of a thawing of the environment as rates come down, where you might see more activity, more homes move. How do you kind of prepare yourself to be able to be more efficient there? So you could look at the process, you could look at what portions do you need to retain, what portions could you remove, and then improve with automation, right? So I think one example that you provided was having too many checks along the way. So people are checking multiple times the same information. Is there a way that you can get software to initially take the first pass and then maybe even review some of that like internally with more software checks on the software outputs, and then only at the very late stages provide that to the human to then review, right? And so all of a sudden the people time and effort is reduced, especially on the more vanilla cases. And then the more complex cases, you could then spend people effort and time on. And I think that's a really good kind of segmentation of what basically things that AI could do versus what people need to focus on. And generally, I think what we found is that people in these roles, they embrace technology like this because it makes their lives easier. They don't want to be doing the more vanilla work anyways. They'd rather work on the more complex cases that requires their domain expertise. It's just that without good software being in place, they have to look at everything from scratch.
For sure. Yep. I think to your point there, it's letting our human brains do the real hard thinking and letting the artificial intelligence do the lower level tasks. I think from the perspective of a mortgage originator, right, we want to kick out and pay more attention to those more complex transactions to make sure that we're doing everything that we should to get that approval or denial, whatever the file needs. Mm-hmm. But you're seeing Fannie and Freddie, they're doing automated underwriting internally, right? So yeah. We're manually underwriting an automated underwrite clear that we get anyway. So it's just, there's a lot of steps in the process. And I think these past couple of years have really allowed folks to take a deeper dive and see where can I do things better along the way.
What makes the automation journey difficult for mortgage originators? Is it, just maybe to throw out some things, is it just knowing which technology to embrace or which approaches or vendors to embrace to go and introduce it? Is there internal resistance maybe from the business side or others? And there might be other reasons, but I'm just curious, like, what do you think are the big hurdles, the obstacles that stand between, getting this technology in the door and deployed, given that technology AI is pretty advanced, right? At least as a consumer, we see it. But in many ways, I think enterprise is always kind of a couple of steps behind in adoption. I'm curious what those hurdles and obstacles are.
I think there's probably some education that is needed for the executive level, right? As you're trying to understand what all AI can do for my company. I think, some folks are worried about, biases that could be built into the system, especially on the underwriting side, right? So I think that's certainly a concern for folks. I think, a lot of mortgage lenders see a lot of new companies popping up in our space, and there's so many of them, they don't understand who does what or how they fit into the process. So it's interesting. Coming from the couple associations that I worked at, we had multiple vendor partners, and I would spend a lot of my time trying to educate my borrowers or my customers who were IMBs and credit unions and community banks, what all of these folks did. So it's certainly clear that they're not sure where to start. I think in some cases, I think there's also some players that have been in this space for a number of years that maybe, it took a long time to get up and running. Some folks maybe haven't seen the ROI over the years. But also I think whenever you're in that implementation piece and any partnership, really setting clear and realistic expectations and standards is super key. I've seen a lot of companies, whether it's dialing into a new vendor, and they might not have any AI or automation really, right? They're just using a new platform, get oversold and under-delivered a lot. And I think I've had some friends that have ran companies that have said, man, I was their guinea pig and I didn't even know it, right? So they were kind of testing along with me along the way. So I think it's a trust factor at some point, an education piece as well. And I think it's really having honest conversations about what implementation and success is going to look like, both on the vendor side as well as the lender side.
Mm-hmm.
Sometimes you can get overly aggressive AEs that promise the world, and it's on the drawing board, but it's not really, ready to rock and roll yet. And I think just having clear and concise conversations with people and letting them know, like, yeah, we're working on it. It's not gonna be in production for the next 3 to 6 months, right? I think spending time and really understanding their process to make recommendations along the way is super important. I think any mortgage company that, brings someone is looking for that consultative approach to say, hey, I think in all of the use cases and all the folks that we've worked with, here's what we're seeing works best as a first step, second step, third step, whatever the case may be. So I think it's just being open and honest and really showing them the path to success along the way.
Yeah, I think that trust factor is very, very big, right? This is new technology, particularly AI. I mean, we've had automation approaches in the past, but obviously the scope of what automation is capable, what automation is possible has expanded because of the latest generation of
For
technology.
sure.
But it's still hard because there's so many companies that are in this space, and you have newcomers into the space, but you also have the more incumbent base that are introducing some of this as well. And so then you're trying to pick and choose, like, how much are the incumbents going to deliver on this that you could potentially benefit from? Or is it, is that marketing speak as well? And then how much of it is from startups and which startups are real versus not? I think it's just majorly challenging. And then the change management piece is very large, which is setting appropriate expectations with the customer to make sure that the vendor and the customer, as they partner together, set well scoped out milestones so that expectations aren't running afoul of what's possible. And then basically, like any promise with a vendor or partnership, being able to more or less deliver on time the things that were slated, right? And I think that could be the start of a very beautiful friendship or partnership in this case. But you got to get the fundamentals right. And I think that's sometimes really hard to get done as a buyer, I'm sure, just given that there's so much net new in the market today.
Yep.
What's your advice to maybe others on the leadership team that perhaps aren't as familiar with what the pain points are on the operation side, but may also not be familiar with technology vendors and technology solutions? So they're still like too far removed from both the operations and the technology to weigh in, but at the same time, they need to be bought in to make a purchase decision. How do you maybe educate or inspire them so that they can set proper expectations and then perhaps come to the best informed decisions possible? Because they're obviously very influential. They're on the leadership team. They make the big decisions, but at the same time, they need to get to a level of awareness before they are informed enough to actually make that final call.
Right. I think, as you're evaluating technology solutions, it's so important to make sure you have like your need to have, must have, can't live withouts, right? Would be great to have. And you really do a side-by-side analysis and comparison. I think that involving stakeholders from multiple aspects of the organization in that decision-making process is super important too. I would never want to make a decision and, never think about the ops people that it's going to hit on the back end if it's a sales thing, right? I think our industry has a very tough time with adoption of new technology, to the point that you see some of these tech providers like just hoping to get to a 50, 60, 70% adoption rate with these enterprise contracts. So you've got to have the buy-in from the leadership side. You have to say the why, right? This is why we're doing this. And I think, to your point, that change management piece is so important. I mean, I've seen it multiple times when, hey, we're doing this and we're rolling it out today. Nobody has any idea. And here you go. And as just a small piece of the pie of change, humans don't like change. We don't like it. We resist it immediately. And if people aren't aware of those changes before they're made, like, it's just total chaos. So I think, working as a team on a project or as you're scoping out a new provider, making sure that you're considering each piece of the pie organizationally so that they have their thoughts and opinions included in the decision-making process is super important. I think, at any organizational level, like before you get that CFO to stroke that check, right, you're going to have to show them the ROI along the way. And I think understanding if we implement now, we're going to see an impact by X. And along the way, we're going to have to influence or have to have these influencers involved in the process. But in 3 years, you're never going to have to worry about whatever again, right? That's super important. I think, educating your executive team along the way and bringing those opportunities to them is super important. Whether they're ready to make that purchase now or make that change now, who knows? But if they're considering it, it's just going to help them along the way, whether it's a year from now or 6 months from now or whatever the case may be. I think leveraging other lenders too. I am a pretty hard believer and big believer in before I'm making a technology decision or a vendor switch, that I'm going to contact similar size lenders all across the country, both that I are recommended by that provider, but I'm also going to use my resource and try to find other folks that are using it so I can get the real story, right? And see both ends. I think it's just really taking your time and evaluating and asking questions and being on former sales SaaS girl, right? You're in a true partnership. They should be supporting you in that courting and sales process to make sure that all of your questions are answered. If they're not, or they're slow to respond, that should be a little bit of a red flag to say, are they the real partner for me?
Right. That makes a lot of sense. I think the partnership level and contribution becomes apparent very early on, right? So I think that sets the tone for the rest of the relationship. I think maybe drawing upon some of the experience from the past 5-10 years on your side, what types of things that used to require a lot of effort have been, let's say, largely automated away, where it's maybe a display of success in what things could be automated to deliver value? Where have you seen those successes so far?
On the front end, I think is probably where I can speak best to as of recently. I think I've seen a lot of companies really be successful in automating search functionality and using natural language processing to really understand the questions that their sales team or their borrowers may have, so that they can search their internal resources or external resources to answer those questions real time. As a salesperson, I live on my phone, right? Like that's where I do most of my work. And if I can look something up and get my answer for a prospect or a potential borrower or whoever in seconds, as opposed to saying, I'm not really sure, which is a great answer. Let me look it back up and get back to you. You're answering that question and getting on to the next objective or the next question or the next step in the process. I think in looking up regulations, like that's a very large task. And I think a lot of teams in the past have had giant spreadsheets, right? And they're looking and scrolling to find product information and clicking out to a website and scrolling through 45 pages to find the answer for an underwriting question, right? I've seen it happen where you can just look it up. What's the policy on this? It takes you right to that page. In that 76-page document, you've got your answer real time. I think where I would like to see a lot of more success is really scrubbing the data that we have on past borrowers, past applicants, making recommendations to them automatically, giving those triggers to my sales team to say, hey, you've got borrower Johnny Smith, and this happened 6 months ago, and here are some things that you need to call them about, without having my salesperson having to dig through all of their own records, is super impactful. I'm seeing a lot of automation in the operations process on the front end of the qualifying side. I think there's a long way for us to go there too. I'd love to see the ability to underwrite, close, application, underwrite, close, and fund a loan in 10 days. I think in the future, a week should be doable, 2 weeks. So I think, it's coming along, but I think there's a long way to go in our industry. We unfortunately have one of the most complex industries in the world.
Mhm.
So there's a long way for us to go, but we're getting there slowly but surely.
So obviously we spent a lot of time talking about automation and where it could enable internal teams to move more quickly. But at the same time, these are individuals largely that are borrowing money basically to maybe for a first home purchase or maybe to refinance, particularly on the first home purchase. And how important is it to have personalization and that human touch in the customer experience side of things, even as we introduce obviously artificial intelligence and other automation software to speed up the process on the back end on your side?
I think it's imperative, right? I think people crave connection. And I think when you can add a level of care into your process and add an element of human touch where you could automate something, if you can fit it in, I think it's worth it.
Mhm.
For example, we send out a month or a weekly report to all of our branch managers and say, here are some potential hot list borrowers, past clients. You should reach out to them. It's very easy to click send an email. It's not as easy, right, to pick up your phone and call that person and say,
Yeah.
hey, da 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 da, right? It'd be interesting to measure the success rate of a phone call touch as opposed to an email touch because I think it just adds a level of care.
Yep.
I think that goes to, it depends on the loan originator and the salesperson, right? But man, if you can remember someone's birthday or anniversary and you have that in your database, do something with it. Don't send
Mhm.
them a generic email. How many happy birthday you get 20% off emails do you get on that one special day, right? How many real phone calls do you get from someone, whether you pick up or not, because no one answers their phone anymore, but you know that that human being called you. That's a differentiator,
Yeah.
right? They're going to remember that.
Yeah, I think that's exactly right. And you could use tooling to capture some of that information. So if you have calls that you make, maybe you have AI that transcribes some of the information in your CRM, and then the CRM prods you to reach out with appropriate message on a birthday or some some date like, hey, it's been 1 year since we did we kind of had the mortgage in place, right? So it's been a year since the borrower and the originator connected. It's just saying is staying top of mind because who knows, maybe the borrower will at some point need to refinance or they're looking to go in and borrow on another property or whatever it might be, or it's a referral that they could make. So there's so many of these touch points I think could be AI informed, but you still retain the human element as part of that.
For sure. I mean, we have a saying in the mortgage business, right? Diapers, diplomas, death, divorce, right? There's always a reason someone's going to be making another loan transaction. Maybe it's
Yeah.
equity, who knows, right? So I think if you can capture that information, if you knew that my kid was going to college in the fall, would you be saying, hey, do you want to tap out on some of that home equity and, not have to stroke a check for that first year? I might be interested in answering that call, right? So I think it's capturing the information, accessing the information, then taking action on it in a way that's going to differentiate yourself from everybody else out there.
Yeah, that's exactly right. And I think sometimes it's the education piece that you mentioned, which the borrower doesn't know what options that they have, right? They don't know that they could draw upon the property that they purchased and the payments that they've been making into their mortgage. So like there are just incredible ways of understanding what's possible given the rate environment and such, and just staying in touch, staying on top of the borrower, I think becomes really important. And the servicing side, we haven't spent too much time talking about that, but also really important, having that rapport, the relationship built out. You could reduce the chances of having delinquencies there. So another great area.
Absolutely. I think, monitoring your servicing portfolio, right? If you have money on your books, making sure you're tapping into that to see if you have actionable items for folks. I mean, there's a lot of really innovative companies that are looking at that first time homebuyer education piece and credit repair. I mean, there's a ton of credit triggers out there already, right?
Mhm.
But if those, I think some of the next gen home buyers out there are really looking for that next generation loan officer that's going to be in with them. That's when, I'm 28 years old and I just finished grad school and I just got married and we're ready to buy our first house. But dang, we have a lot of student loans and
Mm.
they pay off in 2 years, and helping them on their financial journey is going to be super important. And I think if you can capture that information and they're going to provide you with their financial information, and you've got to stay on top of it. I mean, like you said, the first one to get that offer out is normally the one to get the business, right?
Yeah.
So making sure you're first out and memorable is super important.
What about individuals that are working in mortgage origination today? How can they stay relevant and basically protect the job that they have? Just given that maybe demand is still at a low level or lower level certainly than 5 years ago. So and then AI and what it could do in automation. I think it's a very fearful time in some ways for people that are in this space that are looking at should they stay in the industry? How do they protect their jobs? What's your advice to them?
I don't think loan originators are going to go away.
Mm-hmm.
There are direct to consumer platforms and direct to consumer loan originators. I think that operate in a different model and capacity than a traditional boots on the ground retail loan originator that's fully commissioned and has been doing this for their bread and butter for years, right?
Yeah.
I think what loan originators need to be doing right now is to be really making sure that they're reviewing their databases, that they're taking action. I think it's tough in sales, right? When things are dry and you start getting a little panicky and the market's not great. I think overcoming and educating your potential borrowers and potential prospects right now is more important than ever. I mean, you're seeing the consumer sentiments, you're seeing folks kind of not sure
Mm-hmm.
what to do next, right? So I think making sure that they're aware of options, utilizing the resources that you have, right? If you're not fully adapting and adopting the resources that the mortgage company has invested in that you work for, what are you doing? I mean, use the resources they're giving to you. You might be doing 5 times the work to get the same amount of deals that you did 5 years ago. But I think ultimately what we have to remember as loan originators is we are impacting generational wealth for families every single day. So thinking about what's next for them, right? What's in the back of their head? What's keeping them up at night?
Mm-hmm.
How can you help them consolidate all that stupid credit card debt they've accumulated, right? How can they help you tapping into that equity to do some renovations, right? Whatever the case may be, I think having conversations with folks, utilizing the resources that you have, and really, if you're not out there on social media and helping to educate people, you're missing out.
Mm-hmm.
I think ChatGPT, a lot of people are using it to, generate some really great content. I just don't copy it for right exactly how it says, right?
Sure.
Use it to formulate ideas, right? Use it to understand your audience.
Mm-hmm.
How can you create more seminars or first time homebuyer fairs or whatever the case may be? How can you make an impact on the communities that you're serving on a daily basis? Automation is great. And I think if you can implement a little bit over time and feel comfortable with it, start looking at new solutions, start looking at new ways that you can mine your data, that you can be notified of those changes, and then find ways where you can illustrate the options for borrowers. They don't know what a ARM versus a conventional versus a cash, like you have to show these people. And I think you have to have a level of care with a tech piece behind it,
Yeah.
right? You do.
Yeah, I mean, I think that you framed it beautifully, which is you got to keep the mission at large, front and center, which is that you're touching people's lives, not just that individual, but the family and maybe the generation thereafter, right? So generational wealth, as you mentioned, and it's a very personal thing. It's a very like human centric, a lot of empathy, high empathy problem. But at the same time, I think automation and AI allow you to personalize maybe even better than before. It allows you to maybe reduce the amount of administrative work that you're doing so you can spend more time with the customer and also serve more customers generally, right? And I think you have to be willing and open to adopt some of the new technology, not view it in a fearful lens, but how does it enable you to be a better version of yourself to serve the customer better? And I think from that frame, it's like people aren't going to necessarily lose their job to AI. They're going to lose, if they are going to lose their job, it's going to be to other people that are adopting the new technology better than they are, right? So I think leaning in with that message in mind, again, not in a fearful stance, but just it's a great opportunity to get better outcomes for the end customer in mind. Like I think that's really front and center. That's the North Compass. I think that is a really powerful message for others to
Absolutely.
hear.
Absolutely. I mean, technology should be out there and provided by the company that you work at to empower you in a day-to-day basis, right? So making sure that you're utilizing those technology and solutions so that you can be the best version of yourself in the seat while you're working, however many hours a day you work as a loan originator, right? But you're making the best use of your time. And I think to your point, understanding the consumer preferences that you're dealing with, they change from transaction to transaction. So can you incorporate that into some of your campaigning, right? Like I think people need to start thinking out of the box a little bit, and we're starting to. I think down markets breed innovation, if anything. So here's hoping that folks will really use that technology and resources and AI and start exploring. If they haven't, they're already 10 steps behind everyone else.
Well, Jen, this was an incredible conversation. Really appreciate you being on the show.
Thanks so much for having me. It was fantastic.